there's not many days you open the newspaper where you don't see stories about what's happening in the US, particularly over the last couple of weeks around their debt ceiling, or in Europe with a different version of its debt problems. And these, of course, are pretty concerning. Both Europe and the US have large long-term debt problems, and I think we're going to see periodic outbursts of anxiety, loss of confidence, sometimes a crisis, as they try and deal with the pressures that go with debt. The only way to deal with it is pay it off or write it off, and in both places, debt's actually still getting worse. So what difference does that make for New Zealand? Well, we've been concerned for the last 2 or 3 years actually about what happened in 2008 and New Zealand's vulnerability at that time to these overseas markets. And our main vulnerability was simply that both the private sector and the government was borrowing so much off overseas lenders, and our banks 3 or 4 years ago were doing that in a way that meant they had to be in those markets all the time for short-term money. So since then we've taken a number of steps to make New Zealand less vulnerable. I mean, as long as we have a shortfall of savings, we're still going to be borrowing, but we can get in a stronger position. So since then, the government's worked quite hard to get on top of its debt. Now that's been made a bit more difficult by the Christchurch earthquake, but we've got a path back to surplus, which means within 2 or 3 years we should stop increasing our debt. And in fact, over the next 2 or 3 years, we'll borrow about 100 million on average per week. The last couple of years it was up over 300 million per week. So our borrowing has slowed right down. The other thing that's happened is the rules have changed for our banks. The mortgages that people have are financed through the banks who borrow in turn offshore. Now, the Reserve Bank has made sure that our banks are now reliant much more on New Zealand deposits and on longer term lending offshore. And what that means is that if international financial markets are disrupted, then our banks can go for quite a long time not having to borrow in those markets, and therefore being able to keep the system stable here at home. And those are really the two main ways in which we've reduced our vulnerability. The other thing that's happened, of course, is what New Zealand households have done, and they have stopped borrowing more money. In fact, their debt as a proportion of income is dropping a bit, and they're saving more. And every dollar less they're borrowing, every dollar more they're saving is reducing our vulnerability. So we are going to have to get used to ongoing uncertainty in those international financial markets, but we're going to continue to work to protect ourselves from that. Of course, if in Australia, if in the US and Europe they make decisions which mean their economies slow right down, then that could affect us. And the only way to deal with that is to become more competitive, so that even if those economies slow down, we can still sell our goods and services to them profitably for higher incomes and more jobs here in New Zealand.